Now today we have with us David Grossman. Some of our viewers, hopefully not many, but some of our viewers might be people who have done a bankruptcy or a proposal. They've perhaps gone all the way through it, perhaps they're coming to the end of the process or something like that. And one of the things that's going to be uppermost in their minds is the regaining the good credit status that they used to have.
Yes.
Okay. Can you help them with that?
Yeah, well, there are some things that people should do, can do, to reestablish the credit. The first thing they can do is they can go and get a secured credit card. Home Trust is a company that offers it, and basically a secure credit card is you put down some money which they'll hold on to. So, you know, you can put down $1,000 or $1,500. They'll hold the money, but they'll give you a credit card that you can start using. So it's convenient, and it's a way to start rebuilding your credit.
Does it operate just like a regular credit card?
It operates like a regular credit card, except they're holding on to some of your money.
Secure, yeah.
Which, you know, and that's a good way to start. You can also go and get a car loan, because the car lending companies are, you know, pretty flexible. They'll charge you a higher rate on a car, but it's a good way to start to reestablish credit.
Right.
So you can build, you can start reestablishing your credit, and you can get a mortgage from a bank if you've had 2 full years of reestablished credit. So it's by no means game over if you declare bankruptcy or go for a proposal. You get a second chance.
Is there a difference in your experience if people have done a bankruptcy or a proposal, or a difference in the speed with which they can recover their credit rating?
I haven't really noticed a difference. It's from a lender's point of view. They look at the date of completion of a proposal. They want to see, like a Schedule A bank or an A lender, they want to see 2 years minimum reestablished credit, at least from my experience, that's what I've seen. Whether it's a proposal or a bankruptcy, 2 years from the date of discharge of the bankruptcy or successful completion of the, and it's obviously, it's very important that you make all of your payments on time in the proposal.
Right.
Right? We have lenders that will give you a mortgage loan, the B lenders, you know, the alternative institutional lenders that we talked about earlier. They'll give you a mortgage the next day after a discharge of a bankruptcy or completion of a proposal. You'll need to have it, you know, probably a minimum of 25% down. You need to have good provable income, but they'll do it even 1 day after the discharge. The one thing is, though, is that you may not ever be able to get a mortgage from an institution who was part of the loss. So if they lost money,
have you seen that? Yeah.
Yeah. So if you lost money with Bank of Montreal, you go to Royal Bank. If you lost money with both Royal Bank and Bank of Montreal, you go to TD. If you lost money from all of them, then you have a problem.
There's always credit unions.
There's lots of lenders out there. Right. So you take steps to reestablish your credit. You do get a second chance.
But this can happen immediately.
It can happen immediately. Not with a bank, but with our alternative lender. They'll charge a little bit higher rate, but if you're back in the saddle, you're making money, you can show you're making money, and you've got 25% down.
The Glass is Half Full Talk Show.